first of all, we have to talk about the equities market, because I think that's where many people think there's going to be the biggest benefit. Two things that stand out for me from the AMCON CEO's interview yesterday on CNBC was at least they will hold assets for at least 2 years, and then of course they will be announcing sales in advance. What's your reading on how it impacts the equities market?
Oh, I think it's very positive on the equities market. For one thing, it takes a lot of uncertainty out of the market, and markets hate uncertainty, so we've been treading water based on the uncertainty now for about 5 months.
Right.
Secondly, in terms of the actual overhang of stock that is in the market, if AMCON takes out all of the margin loans, or pretty much all the margin loans from the banks, and then declares a 2-year moratorium, I think they may even hold those stocks longer, because they're going to be buying them at above market value. They're going to want to recoup at least what they've paid for them and probably make a profit out of them. If their financing is already pushed out towards 5 or 7 years, why would they sell the stocks before they actually have to? Because then they're going to be sitting on cash. So as long as they feel that the stocks have got a better chance of going higher, then I think they'll probably keep them for closer to 5 years.
So it's pretty safe to say that they will hold those for at least for a while. And of course, the banks would benefit. What are the positives that you see? Because obviously some analysts have hinted that many banks that are holding non-performing loans, margin loans in particular, are likely to benefit because they are going to be selling at a 60% premium.
Absolutely. I think almost all the banks, whether they cleared banks or rescued banks, will sell most of their margin loans onto AMCON.
And then let's talk about the bond market, I think, which is where I think there's lack of consensus on how it impacts that market. They're going to issue bonds. We're not too clear on how much they're going to issue. It's pretty safe to say somewhere around 1.5 trillion, I think, in bonds. How do you see that impacting the bond market? Because some are saying that there might be a glut in this market.
I think there has to be a glut in this market. The way that they're issuing them is not going to impact the market immediately, because basically my understanding is that they're going to use bonds as a currency. And as they buy the MPLs from the banks, they will give the banks back these bonds. Now, what the bonds are actually going to be is a question that we all have. There's a lot of talk about zero coupons out to 7 years, maybe 5 years, 7 years, and 10 years. If they do that, as long as they have one series that they issue to everybody, you're going to have one very, very large bond issue. That will be quite liquid. If they do a different series for every bank that they are bailing out, those bonds are going to be absolutely and totally illiquid, because they're going to be like private placements. And at that point, they don't help the banks very much, but they don't do much to the bond market, because they won't trade. However, I think that what they will do is issue a single series, and every bank will get the same bonds. Those will then become very liquid, but they will also add almost double the supply to the market that we have at the moment.
Right, and the market is already somewhat stretched in terms of supply right now, isn't it? And just to clarify, the AMCON bonds, because they're backed by the government, are pretty much federal government bonds.
They're federal government obligations, so they're going to certainly impact the federal government bond market. They may trade at a slight premium to the federal government, but frankly, if they're the most liquid bond in the market, they may very well trade right on governments.
And of course, there's the issue of the pricing of these bonds, because the 7-year is somewhere around 12% right now.
That's correct.
And even if they're going to issue zero coupons, I mean, do you have any estimates of how much the government may have to pay back in 10 years' time?
Well, if they issue a zero coupon for 7 years, and they issue it at 12%, that's roughly 44 kobo in the Naira. So for every trillion that they issue, in 7 years, they're going to have to pay back 2.3 trillion.
2.3 trillion. So
now, you're assuming now that the banks are going to hold all these bonds. I don't think they will. I think the banks will try and sell some of them. And let's assume that they push rates back to a point where you bring the international buyers in, because there certainly is not the appetite within the Nigerian market to take down another trillion Nairas worth of bonds. So to get these bonds sold, you're going to have to bring in the international players. I would imagine around 12% they're starting to get interested, but if there's that much supply, that's probably going to push it to 14.
So you think bonds, obviously, the outlook is that for yields to go up and prices to come down?
Absolutely.
And then let's touch on the currency, because the Naira has shown some stability recently on the back of some policy moves by the central bank. How does this this transaction impact on the currency in your view?
If this transaction attracts foreign investors, then clearly it's going to be positive for the currency because there's going to be buyers of Naira, sellers of dollars. The Naira should be fairly stable because the US dollar is weak. The oil price is stable around 70 to 80. The production of oil in the country is still pretty stable. The reason that the Naira probably isn't being taken up a lot higher and there's more pressure on it is the political situation. Will the oil production stay where it is? If it does, and once we get through the election, if the production is still there and the price of oil is around 80, I think the Naira should appreciate.
Okay, and just very briefly, because we need to wrap, hopefully you can get a very quick answer. How do you allocate right now? Equities, cash, bonds?
For the moment, and this is for the next 6 months, I'm underweight bonds, I'm underweight equity, and I'm overweight cash.